Bonsoir, good evening, and welcome to our third annual information meeting. My name is Tom Maston, and I'm the chairperson of the Board of Trustees of the CBE Pension Plan. This evening, I'm joined by my fellow board members and two presenters, Yves Plourde, actuary and partner with TELUS Health, the plan's independent actuary, and Sean Hewitt, the president and CEO of Vescor Inc., the plan's investment manager and administration services provider. Yves and Sean will provide an update on the financial health of the plan.
Great. Thanks a lot, Tom. So as Tom mentioned, my name is Yves Plourde, and I'm an actuary with TELUS Health.
Given the continued healthy financial position of the plan at the beginning of 2025 of over 1.37%, the trustees were able to provide a COLA of 2.01%, which will be effective on January 1st, 2026. This COLA again covers the full inflation in Canada. This COLA is provided at a cost of $56.8 million. It is a great achievement by the plan to have been in a position to provide COLAs which have equaled the full inflation since its conversion to a shared risk plan, especially during times when inflation has spiked at levels not seen in decades. And the plan did so while maintaining a funded level among the highest ever, over 137%. The board put in place in the last year traffic lights communication to communicate more effectively the financial health of the plan. The traffic light was identified as a quick and easy way to transmit information about the financial status of the pension plan and its ability to provide COLA. It is now being used in most communication material issued by the trustees, such as the newsletters and annual reports. The traffic light will change color depending on the level of the open group funded ratio of the plan. In turn, the level of the funded ratio provides you with indication of ability to have a COLA at the end of the year. A green light indicates that the funded ratio of the plan exceeds 120%. A funded ratio of over 120% indicates that the plan is in a healthy financial position and can provide a COLA for that year. As you can appreciate, with a funded ratio which is actually at 137.7%, the plan is currently showing a green light. Now, if we look back in the years, if the trustees would have adopted that tool of communication since 2015, we can confirm that since then it was always in a green light status because the funded ratio never went below 120%. This means that the plan has remained in a healthy financial position over the last decade or so, with an ability to provide consistent and predictable COLA throughout these years.
Thank you, Yves. Updates on the plan's funded status, including the traffic light, are always available on the plan's website and in our semi-annual newsletters. The website can be accessed through cbenb.ca for any updates. Joining us next is Sean Hewitt, President and Chief Executive Officer of Vescor Inc. Vescor is the plan's chosen investment manager for administration service and administrative services provider. Sean will speak to the investment and administrative results of the plan. Welcome, Sean.
Thank you very much, Tom, and good evening, everyone. Thank you all for joining us today. So this is a list of things that we are responsible for, all of which are very important and contributes to the financial health of the plan. We do the day-to-day management of investments and are responsible for the investment approach and execution of investment strategy. We are responsible to provide regular reporting of investment performance to the Board of Trustees, regular reporting on compliance and responsible investments. And we do work with the plan actuary to conduct analysis on the sustainability of the plan and do plan projections. It's important to note that we do not determine the plan's risk tolerance or fund objectives or determine the plan's target asset allocation. Moving on, we're in November 2025. So we provided just a brief snapshot of where returns are shown through June 30th of this year, where we have earned a 2.8% investment return for the first 6 months of the year, which is a little bit below the investment benchmark return over the period. Over the 1 year period ending June 30th, we have earned a 9.74% return, and the last 12 months have been characterized by relatively high returns, driven largely from global equity markets, very strong global equity markets, despite considerable volatility over the year. In general, the plan continues to perform very well. The plan's diversified investment approach is designed to provide stable investment returns over time, which protects the plan in down markets. However, this approach does mean that the plan's investment returns will not be as high as some peers when there is really strong equity market returns. Looking at the administration, pension administration function at Vescor, here's a list of things that we were responsible for. Answering day-to-day questions. So when you call, have a question about your pension plan, our member services staff is available to answer those questions. We receive employee and employer contributions on behalf of clients. We pay monthly pensions through our pension payroll services, and we fulfill pension-related requests. For example, pension estimates, retirements, marriage breakdown calculations, and purchasing of a service calculations. Some quick facts about the administration services. We may remain quite active with over 36,500 member and employer contacts over the year, and with over 7,000 member applications processed. Importantly, we regularly benchmark the costs of our administration services against national peers, and we're proud to report that we continue to execute the pension administration services very cost effectively. Our cost per member, as ranked by a national peer group, is the lowest in our lowest amongst Canadian peers at $111 per member. And maybe I'll just close in summary. Vescor continues to cost effectively exceed the long-term objectives of our clients as intended. Our organizational structure and governance model is built on industry best practices with independent oversight, and we are committed to serving our clients and their beneficiaries.
Thank you, Sean. We recognize that some of the information shared this evening is complex, but we hope you have gained a better understanding of where the plan stands today. If there are 3 things I hope you take away from this evening, they would be: number 1, the plan is well funded and in a healthy financial position. You should be proud and reassured at the results presented this evening. Number 2, we have been in a position to award full cost of living adjustments to all plan members every year since the conversion of the plan to a shared risk plan. All active, deferred, and retired members receive these increases, which help ensure current and future pensions keep up with inflation. The next adjustment, announced this evening, will be applied as of January 1, 2026. This is an extremely positive outcome, especially when considering that some of our peer plans have no cost of living adjustments, and in some cases, those plans are not fully funded and remain at some level of risk. Number 3, if you have any questions, do not hesitate to contact Vescor for answers. Their member services team is a resource that is available to you 5 days a week. Call, email, or visit them. Visit your plan's website for more information as well.